Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we got the Dow down 25, NASDAQ up 25. Basically, we're flatlining. Why? Because it's Fed day. Fed comes out about an hour from now. What's Fed going to do? Well, they're going to raise a quarter basis point. That's what's expected. I don't think they'll disappoint anyone, a quarter basis point. But what way will the market move? I really don't know. But my guess is we'll probably get a head fake higher, and then we're going to get ready to come down lower. Now, why do I think we're going to come down lower? Well, we got this thing called the debt ceiling, right? The debt ceiling. Okay, so they say that that's going to be coming to a head June 1st. All right, so you got the Republicans and Democrats that are standing off. They're in a battle, but it always gets passed, right? But it always causes market turmoil, and this market turmoil will send the market lower. We may get a head fake today. We may bounce up a little bit. We may bounce into the resistance zone on the S&P. That'd be the 4150 to the 4200. We may bounce into that zone before we come lower, but this debt ceiling standoff, I think will send us lower, right? Now, okay, let's move over to the real estate market. Now, in the real estate market, a lot of people, well, my opinion's not popular with everybody, that we're going to come down by about 50%. 50% from the high of where Billy Bob sold. Billy Bob got out at the top, and we're going to come down by about half. Now, why is that? Why do I think that we're going to come down by 50%? Well, this is the biggest bubble the world has ever seen, right? We had the great financial crisis. Now, a great financial crisis, we only came down by about 34%. Let's call it. Okay, we never got a chance to play it out. I think it would have come down 50% then if they let it play out. But what'd they do? They printed trillions and trillions of dollars. Now I'm an old guy, and I remember when $1 trillion used to be a lot of money, right? Now it's just something that we just print every year. We print trillions and trillions of them because it's not that much money anymore, right? But they're going to print this money, and they've artificially inflated this bubble bigger than anything. Okay, so in the great financial crisis, came down about 34%. Now, what about the Great Depression? How far did we come down the Great Depression? In the Great Depression, we only came down about 25%. Well, how's that possible? Well, during the Great Depression, things were different than they are now. You see, in the Great Depression, people would put 50% down on a house. How much are we putting down right now? About 5%. That's what we put down on houses now, 5%. Okay, and that 50% they put down, they'd get a loan for 50% if they could find a loan. But the loan was not for 30 years, and we're even going 40 years now. Back then, the loan was for 5 years. Okay, so 50% down and the 5-year loan. So during the Great Depression, only came down about 25%. But this time, we're going to talk a little more about a depression that's coming up. Okay, now this depression, I think we're going to come down by about 50%, and that may be conservative. Okay, and I know what you're saying, but Mike, there's no inventory. Houses can't come down. Now, I get that. I understand that in your area, houses will never come down, even if we have a Great Depression, right? But what you're not looking at is the macro picture. See, a lot of people are just looking at the housing market. It's not the housing market that's going to bring housing down. No, the housing market, I agree with you. There's no inventory. Inventory's locked up. Sellers don't want to sell. They're tied into that 3%. I agree. No inventory, right? But what you're not looking at is the macro picture. The macro picture. Okay, so look at the macro picture, there's certain things going on. We're having that banking crisis right now. Now, of course, if you listen to Janet Yellen and Jerome Powell, he'll come out and talk to us today. And you got, Jamie Dimon and even Biden out there. They're all saying that there's no problem in the banking system. The banking system is now fixed. It was broken last week, but now it's fixed, because Jamie Dimon came in, bought First Republic. So it's all better now. Now, it doesn't work that way. Financial crisis, it's not a financial financial crisis this week, no crisis this week. There's a lot of stuff going on underneath the market that they don't understand. I guarantee you they don't understand. They don't know how to fix it. It's not possible to fix it at this point. Okay, so that's the banking crisis, and there's going to be more going down. We got another two lined up. What is that? Pac West, it should be going down. WAL, it should be going down. That's probably within the next week or two. The First Republic's not the last bank that's going to go down, but what we're going to bring these regionals down? Well, it's the commercial property. Commercial property, right? These office buildings, these big high rises, they're sitting about half empty, right? But they have what was back in the day called an ARM, an adjustable rate mortgage, right? And that's what happened in the 2008 crisis. That's why people think, oh, we're not going to have another 2008 crisis. Nobody's got an adjustable rate mortgage anymore. I got news for you. Commercial property has adjustable rate mortgages. They adjust every 3 to 5 years. They have to refinance the whole office tower, right? And those rates just went from 3% up to 7 or 8%. And the office building is now sitting half vacant, so they don't even want to make those loans. So this commercial loans, the commercial mortgage-backed securities that are held by these regional banks, they're going to bring down these regional banks one after the other after the other. It's going to start to be like a domino effect. You're going to hear about it every week, right? It's not going away. No matter what Jerome Powell comes out and tells you today, it's going to come down, right? And when the commercial property comes down, it's already for sale in San Francisco, 80% off, 80% off. When it comes down, it's going to bring the housing market down with it. Nobody believes that, but yes, they're interconnected. Why? Why are they interconnected? Because of the banking system. What do people buy houses with? They buy houses, 80% of people buy houses with a mortgage. Yes, I understand 20% they have cash to buy their house, but 80% of the homes are bought with mortgages. When credit freezes up from the commercial property coming down, that's going to freeze up the credit system. They're not going to be able to get a mortgage to buy houses. What happens? It takes away 80% of the market, right? And the 20%, they know they're the only game in town, so they're waiting. They're waiting for the half-off sales. That's what they're going to be waiting for. And that is going to happen. Of course, not in your area. I get that. But you see, there's this thing. Right now, we're in this biggest financial bubble the world has ever seen. What happens after financial bubbles? Well, typically, depressions happen after a financial bubble. And this isn't going to be any ordinary type of depression. It's going to be bad. And here's why. Look, the financial bubble isn't because the economy got overheated and we're so productive, we're making all this thing. No, this financial bubble this time was just that we printed money and we blew it up to this king size worldwide financial bubble. And after a financial bubble happens, then comes the depression. Okay, so my opinion is yes, I don't want to scare anybody, but I think we're going to see a depression. That's just my take. This bubble is going to pop. It's already starting to pop. Look at you got to look at the macro picture. The macro picture. We got the banking crisis, right? We got commercial properties that are just going to be dropping by 80, 90%. We got debt. And I'm not just talking about the United States debt. Yeah, we got that debt ceiling coming up, right? We're at 32 trillion. Yeah, we got another $100 trillion in unfunded liabilities that we're going to have to print more money to fund those. 100 trillion there, 32 trillion. The Fed's got 9 trillion on their balance sheet. Do you realize how that 9 trillion? 3 trillion of that is in mortgages. Okay, what if the Federal Reserve sold those mortgages? Oh, that'd be fun, wouldn't it? Because you'd see houses come down. That would bring houses down by 50% right there. That would bring the market down. You see, the market's been manipulated higher. It's an artificial market. It's not real. It's going to come down. Okay, so we got not just the government debt, though, right? Corporate debt. Corporate debt's at a record high. You got these things. They're called zombie companies. Zombie companies is about 20% of all companies right now. They don't bring in enough enough cash, right, to even stay alive, so they have to borrow money. Well, right now, money's going to get really tight for them, especially when we hit that recession, especially when we go into a depression. These companies are going to disappear. They're going to vanish. And that's what happens when you get the depression, right? The assets, the financial assets, they deflate, and they actually go away, or they stay permanently low, right? Now, of course, that's not going to affect your house. Your house is going to stay up here. No, your house is going to come down with all the financial assets because it's a debt asset. Okay. All right. So this is going to hurt a lot of rich people. A lot of rich people are going to get hurt. Why rich people? Well, let's think about this. Right now, we got inflation, right? And inflation, well, that's hurting the poor people. The poor people can't afford food. They can't afford gas. But what does inflation do to the rich people? Well, it makes them more rich, right? Because it blows up the financial bubble. But when this pops, what happens to the rich people? It makes a lot of rich people poor. Look at 20% of the top people own 90% of the assets, 90%, right? And those assets are going to be coming down. So those people are going to start to become poor. Now, those 20% of people are responsible for 50% of the spending in the economy. Our economy is based on the consumer. 50% of it comes from rich people. When rich people stop spending, you go into a depression. Yes, you start with the recession, but that turns into a depression because the rich people start to become poor. Now, no, that's going to make a lot of you happy because the rich people are going to finally get hurt. They're going to get hurt when this asset bubble pops. It's just how it's going to play out. But here's the thing. Okay, so let's get back to debt. You got the the government debt, state and federal, a lot of debt. You got corporate debt, record high. There's zombie companies going to go away. Job loss is going to be incredible. Okay, so that's going to go away. But you got the individual debt. The individual debt right now is at record high. Record high credit cards, record high auto loans, record high student loans. Now, the student loans, eventually they're going to have to start paying on them. You see, this pandemic has really messed things up. People think they don't have to pay their bills anymore. They don't have to pay your rent. You get an eviction moratorium. Don't have to pay your mortgage. We go on forbearance. And you don't have to pay your student loans. That's frozen. Now, Biden, he wants to wipe out those student loans. Not going to happen. I don't think the Supreme Court's going to rule in that favor. Maybe they do. Maybe they wipe out 10,000, 20,000 of student debt. I don't think they will, but they might. But even the debt that's left over, they're going to have to start paying on. Everybody's buried in debt right now. And this is going to cause a significant drop in the demand for homes. Significant. It's the demand for homes a year from now, it's just going to be non-existent. I mean, right now, I get it. In your area, still multiple offers, record high prices. I get all that. But that's going to go away. When they can't get a mortgage for the house because of the credit crunch, because of the banking crisis, because of the commercial property, because of the debt, it's going to be ugly. It's going to be real ugly. You're going to see the demand for houses just vanish. Now, I've lived through some cycles, and it's amazing how fast it can disappear. Look, it can disappear almost literally overnight to where you can't get out of your property at any price. I was stuck in, this goes way back. I'm an old guy, but I was stuck in 3 properties. Oh, I had so much leverage on them. I couldn't get an offer no matter what the price was. The market just freezes up when they can't get financing, when the debt goes away, the credit, they can't get credit, right? The debt's too big. The credit crunch is here. It's going to happen, right? Okay, so this is going to bring down the housing market. It's just how it's going to play out. I know a lot of you don't believe that. A lot of you think, but Mike, where's the inventory going to come from? But Mike, people have to live somewhere. I'm telling you, when the demand goes to zero, you don't need inventory. There's no demand. There's no one. Eventually, someone has to sell, and that brings the prices down. Now, granted, you just can sit back in your house and go, hey, Billy Bob got $1 million. My house is worth $1 million. I don't care that my next door neighbor had to sell for $500,000. Mine's still worth $1 million. You know, I've never met a seller that thought his house was worth less than the market rate. All sellers sellers believe their house is worth more than it actually is. And you can sit there and believe that all you want, and that's fine. In your area, you can still believe that the houses are going to stay up. They're not going to stay up when the demand goes away. Look at right now, we got what's called M1 and M2. These are the money supplies, okay? They're actually collapsing. They're actually contracting. Why is that? We're printing trillions and trillions and trillions of dollars, but yet the money supply is contracting. It's contracting because the banks are not making any loans. Matter of fact, the banks won't even loan other banks money right now. They're so afraid of the other banks because they don't know. They know they're in trouble. They don't want to loan any money to someone else because they know they're in trouble also. All these banks are insolvent. All these banks are in trouble. It's going to be a domino effect. It's not going to be pretty. Now, don't worry. Your money's going to be safe. The FDIC is going to come in and they're going to print the money. They don't have the money. They have less than 1% of the money, but they're going to print the money. You'll get your money, but your money's not going to be worth much when this hits. This is going to get ugly. Now, a lot of you don't like listening to this stuff. Oh, actually, you probably do if you're on my channel. I don't know. Anyways, I like talking about it. If you like this stuff, give me the thumbs up. Why not? Why not? It's Fed Day, about an hour away. We'll see which way that market moves. I think we're going to get the head fake up and then we're going to come down. That's just my take. And it takes a day or two to play out. The initial move, I think today, tomorrow will probably be a little bit higher. But then I think we're going to get a pretty big drop coming. Just my take. I'm Tall Mike. Get out there. Enjoy the day, everybody. Don't forget, hit me with the thumbs up. Why not? Bye-bye now.